In the US, we just got the delayed jobs report for January. Economists had expected that the January's non-farm payrolls report, delayed because of the short government shutdown, will show nil growth or not much better during the month. Total US non-farm payroll employment was up by 130,000 in January, and jobless rate fell to 4.3%, also better than 4.4% expected. Job gains occurred in healthcare, social assistance, and construction, while federal government and financial activities lost jobs. Ahead of the report, alternative data sources suggested there could be underlying weakness in the jobs market or flat growth, but the strong beat came as a surprise. This also followed the 48,000, revised from 50,000 increase recorded in December. The labor force participation rate ticked up to 62.5% from 62.4%. Annual wage inflation measured by the change in the average hourly earnings held steady at 3.7% compared to the market expectation of 3.6%. The Statistics Office released benchmark revisions for the year prior to March 2025. Those numbers saw the initial count down by a total 898,000, still lower than the 911,000 figure for the initial estimate last September, but around Wall Street expectations. Dow futures rose 200 points after the much better than expected report, as US stock market traders were encouraged to initially buy the dip, but the prospect of higher Federal Reserve interest rates for longer could later weigh on sentiment. Gold was also down. Hello, this is Global Business Insights, where we look at the world from a business perspective and bring you news, views, and analysis that helps to bring you up to date on the context. In China, the consumer price index was up 0.2% in January from a year earlier. The data was below forecast of 0.4% increase and followed a 0.8% growth in December, which was also its highest level in nearly 3 years. In the United States, retail sales for December remained unchanged, contrasting with forecasts of a 0.4% increase and the 0.6% growth observed in November. Of the 13 categories evaluated, 8 experienced declines. Given that consumer spending represents approximately 2/3 of the US economy, this deceleration is particularly significant. The S&P 500 closed lower as investors reacted to disappointing retail sales and concerns about the threat of artificial intelligence to the financial sector. The Nasdaq Composite fell 0.6%, while the Dow Jones Industrial Average gained 0.1%. Ford Motor reported its first quarterly miss since 2024 and its largest quarterly earnings miss in 4 years. The earnings miss was largely due to unexpected tariff costs of roughly $900 million related to credits for auto parts not taking effect as early as expected. BP has become the first major oil company to pause its share buyback program as it seeks to strengthen its balance sheet following challenges associated with its recent transition towards green energy. In its announcement on Tuesday, BP stated that all excess cash would now be directed towards reducing its approximately $22 billion debt, emphasizing the need for urgent measures to restore the company's financial performance and strengthen its balance sheet. This decision reflects BP's ongoing response to the impact of its previous strategy to reposition itself as a green energy business under former Chief Executive Bernard Looney. Additionally, BP has written down $3.1 billion from the value of its renewables business and reduced its capital expenditure plans for the current year. The British energy major posted fourth quarter profit in line with analyst expectations amid lower crude prices. Still on oil and gas, rising US-Iran tensions and the recently updated US maritime guidance are driving oil prices up as traders reevaluate geopolitical risks. The US advised its ships to avoid Iranian waters in the Strait of Hormuz due to ongoing nuclear talks, military tensions, and threats to global oil shipping. Oil prices this year have edged higher so far in the second trading week of February, with Brent pushing towards $70 per barrel on rising expectations of US-Iran confrontation. Also, according to S&P Global, OPEC Plus production dipped in January to 42.56 million barrels per day, a 270,000 barrels per day decline compared to December levels, and the first monthly drop in 13 months, driven by output cuts in Kazakhstan, Russia, Nigeria, and Libya. Meanwhile, Venezuela's national oil company has reversed most of earlier production cuts implemented as a precautionary measure following the capture of its president Nicolas Maduro. It reported that oil output in the Orinoco Belt is now close to 1 million barrels per day. Venezuela is also sending its first crude oil cargo to Israel in years as the Latin American country's exports begin to open up. Paramount, a leading entity in film and television, has enhanced its proposal for Warner Brothers Discovery in an effort to displace a competing acquisition bid by Netflix, which currently values Warner Brothers Discovery at $83 billion. As part of the revised proposal, Paramount has agreed to cover Warner's $2.8 billion termination fee associated with withdrawing from the Netflix bid, as well as $1.5 billion in fees pertaining to Warner Brothers' debt refinancing. Warner shareholders are scheduled to vote on Netflix offer by April. McKinsey & Company has reached an agreement to sell its investment subsidiary MIO Partners to Neuberger Berman, a leading fund management firm. This transaction comes in the wake of issues involving conflict of interest between McKinsey's consulting operations and its investment office. In 2021, the U.S. Securities and Exchange Commission imposed an $18 million fine on MIO for compliance deficiencies. MIO currently oversees approximately $20 billion in assets for both current and former McKinsey employees. This year, major social media platforms are facing legal proceedings over claims that their services have harmed children. The trial began Monday in Los Angeles County Superior Court, with Meta and Google accused of deliberately making their platforms addictive and damaging to young people. TikTok and Snap chose to settle out of court for amounts not publicly disclosed. While many agree that some restrictions for children are necessary, it remains uncertain how the courts will demonstrate that social media use has actually contributed to mental harm and poses risks for young users. Apple and Google will update their UK app stores after intervention from the Competition and Markets Authority. The companies agreed not to favor their own apps and to be open about their approval process for other apps. This comes 7 months after the CMA identified an effective duopoly in the UK's App Store market. CMA Chief Sarah Cardle says these steps are a starting point to strengthen the UK's app economy. Coca-Cola shares declined by up to 4% early Tuesday following the release of a prudent forecast for 2026 as described by CEO James Quincy. The company is addressing ongoing challenges in international markets, particularly in China, India, and Mexico, where a recent soft drink tax has impacted performance. Additionally, sales in the Asia-Pacific region remained unchanged during the fourth quarter. The Minister of Finance and Coordinating Minister of the Economy, Chief Olawale Edun, announced at the Conference for Emerging Market Economies in Saudi Arabia the commencement of the sale of state-owned assets to help finance the 25 trillion naira deficit projected in the 2026 budget. The government is deciding which assets will be offered for sale with a timeline and structure soon to be released. The proposed divestments form part of the strategy to optimize government-owned assets, improve efficiency, and position Nigeria as a more competitive destination for private investment. The minister added that the asset sales will be done in a transparent, credible, and investor-friendly manner. Analysts see the move as positive in reducing the debt burden and enhancing productivity, moving more economic activity into the private sector, also enhancing the attraction for investments. One of the largest investors in Africa infrastructure, Harith General Partners, is set to take full ownership of South Africa's largest airline, Safair. The move expands a transport and logistics portfolio, which includes stakes in Lanseria and Traxtion, Africa's largest private rail operator. Harith's proposed investment also reflects confidence in Safair's proven operating model, strong management team, and long-term growth prospects. Kenya's central bank cut its benchmark lending rate by 25 basis points to 8.75% despite calls to hold rates steady as food-related inflation risks mount. The decision marks the 10th consecutive reduction since the easing cycle began in 2024 and brings the central bank rate to its lowest level since January 2023. The bank committee said the cut reinforced credit growth, noting that inflation remains well within its 2.5% to 7.5% target band. Yesterday, Kenya's telecom company Safaricom introduced stock trading on its M Pesa mobile financial platform, potentially opening up the stock market to millions of new small-scale investors. Launched in 2007 as one of the world's first mobile money transfer services, M Pesa now has 35 million users in Kenya. Over time, it has expanded to offer a wide range of financial products, including savings accounts, banking, and investment options. Botswana, recognized as a prominent diamond producer, has announced tax increases to address declining sales and a budget deficit attributed to the rising demand for cheaper lab-grown diamonds. The Ministry of Finance proposes raising the corporate tax rate by 2.5 percentage points to 24.5%. A comparable increase is also planned for the highest personal income tax rate, which will be adjusted to 27.5%. Asia-Pacific markets closed mostly higher despite AI fears and flat consumer spending from latest US December retail sales report. In Asia, investors are also assessing the latest CPI data coming out from China. US stocks extended gains as the January jobs report eased some of the negative sentiment in US stock markets after weaker than expected retail sales data released yesterday. Well, that's it on this special edition of Global Business Insights. This is Bode Oshosami. Please do not forget to subscribe and hit the notification button. Thanks for watching. Bye-bye.